Welcome, investors, to the Absolute Return Podcast, your source for stock market analysis, global macro musings, and hedge fund investment strategies. Your hosts, Julian Klimachko and Michael Kesslering, aim to bring you the knowledge and analysis you need to become a more intelligent and wealthier investor. This episode is brought to you by Accelerate Financial Technologies. Accelerate, because performance matters. Find out more at accelerateshares.com.
Welcome, folks, to the Absolute Return Podcast. I'm your host, Julian Klimachko. I'm joined by my co-host, Mike Kesslering. And on today's show, we welcome special guests, Victoria Grace, founder and CEO of Queen's Gambit, and Youssef Salem, CFO of Swvl. Queen's Gambit is a sustainability-focused SPAC that announced a $1.13 billion merger with Swvl, a Dubai-based provider of transformative mass transit and shared mobility solutions. On the podcast, Victoria and Youssef discuss the founding of Queen's Gambit and whether Victoria is a fan of the Netflix series or chess, how Swvl differentiates itself from Uber or Careem or other competitors in the marketplace, some of the key drivers that investors should be aware of for Swvl, and more. So with no further ado, here's our show with Victoria Grace of Queen's Gambit and Youssef Salem of Swvl. So we have Youssef, CFO of Swvl, along with Victoria from Queen's Gambit, talking about a merger today. I wanted to get into both of your backgrounds prior to talking about the specifics on Swvl and the going public transaction that you recently announced. Youssef, I understand you have a background in investment banking, worked at Moelis. Can you talk about your career trajectory and ultimately what opportunity you saw with Swvl?
Absolutely, Julian. Thanks for having us. So I've been in investment banking for the last 9 years, including the last 5 with Moelis & Company as an executive director in the Dubai office, covering our Middle East and North Africa kind of clients. I've already been working with Mustafa and the team for a couple of years fundraising on the private side. Clearly saw a huge opportunity in the business being through the kind of the private funding in terms of kind of various aspects, right? Whether it's the growth, the kind of overall problem the business is solving, the ESG emphasis, the very strong unit economics, which meant that kind of when this opportunity came up with the business going public, I formally joined the team as a CFO.
Okay, and Victoria, I did want to get an introduction from yourself. I noticed you have a long career in tech investing. Can you tell us about your background and the thesis behind the launch of Queen's Gambit Growth Capital?
Sure, thanks for having me. Great to be here. So I've been investing for over a decade now, kind of across capital structures. I started my career at Salomon Brothers, actually, doing investment banking, and then made a shift towards buy side. Was at Dresdner for quite a bit of time, and then launched my own fund 5 years ago or so called Careem Capital, where we focus on the early stage technology investing. We had an interesting, almost the opposite of health consequences on pandemic in our fund, where we had all our companies, for the most part, I shouldn't say all, but most companies doing quite well in pandemic. And we had a number of exits last year. One of them was a company that was taken out by a SPAC. And so it was an interesting experience for me. I was on the board of a company, was intimately involved in the entire process, and saw firsthand benefits of this transaction, both for the company, for investors, for SPAC shareholders, and sponsors. And so for me, it was definitely an eye-opening experience that I wanted to take learnings from. I also realized that there'll be quite a few SPACs coming down that path and utilizing this type of vehicle to take company public. So I wasn't sure if I wanted to do it, but then ultimately decided that I probably could do a differentiated product. And my focus was very much around growth story and a super high quality company to partner with. So that was like the first element that I wanted to focus on. The second element was all around the type of team I wanted to assemble around myself. Having gone on the target side through this transaction, I knew that the number of skill set you need to have around the table to have a successful process. Raising a SPAC is actually the least important piece. It's really finding the target, it's negotiating the structure, it's this SPAC process, and what happens post-close of transaction. That's super important. So that was in the back of my mind. I want to make sure I had very, very qualified team around myself. And then, the last element was, okay, well, I don't see any women involved in SPACs, really. I mean, I've spoken to 20, 30 SPACs, and they were all run by men, and maybe they'll have one woman on their team at the board level or advisory. So I decided to do something radical and have the entire team, the board, advisory, all female executives. So there's 12 of us in total, and we essentially have experience taking companies public, have experience running companies, high growth stories, public board, corporate governance, all of the stuff that's actually super important to be a public company. So that process started in December last year. We launched in January and had very, very successful reception in the marketplace for this product. And that was sort of the premise for starting this type of vehicle.
Yeah, you'd be surprised at how many executives we have had on the podcast who also started their careers in investment banking, as both of you did, and both Mike and myself did as well. So that is a common thread in all of us, I bet, have solid Excel skills and good PowerPoint editing skills. But I digress. Victoria, so you started the first all-female SPAC, and we have seen that model replicated a little bit in the market. So currently that seems to be working. Also a super unique name, Queen's Gambit. So I was curious, do you have a penchant for chess or Netflix? Everyone's, I'm sure, aware of the super popular Netflix series that recently came out.
Yeah, that's a good question. So I'm a chess player. Colleague Capital, the name of my venture fund, is also named after chess move. So chess is sort of, I look at chess as a very strategic game, a game that you have to anticipate future moves. You have to be prepared. And investing, I envision in a very similar vein. You have to really understand what it is that you're doing, what are the next steps to have a successful investment, how can you be helpful, how can you anticipate things. So with that in mind, I wanted to continue naming my vehicles after chess moves. And with this particular move, it was a little bit of, I had to think through, do I want to name this after a Netflix show? Because if that's what people would say, look, it's a Netflix show. But there were so many things that resonated with me with the name. We're all women, and Queen is obviously a big piece in the name. It's also Queen's Gambit. I don't know if you're a chess player or not, but typically it's the oldest move, typically being utilized by expert players. And the quality of my team, we all experts in our respective fields. So that also played in. And then ultimately, I decided that I want to have that, that name because it's just the move made total sense to me. And it's also, taking early sacrifice for benefit later on, which is, again, you partner with a SPAC, and maybe it's a challenging process initially, but you're going to benefit in the back end. So all of these elements fit so well. At the end of the day, that being a really good marketing move, because what happened was, we went out at the days when there were 30 SPACs a day price, which was insanity. And that was really worrying to me. I mean, like why I wanted to have a very different product. Mm-hmm. And so the name actually really helped me because people were looking at Queen's Gambit. And obviously a lot of people seen the show, and that piqued their interest. The only way for me to shine is for people to read my S1. Right. And so people were like, what is this? And they open up and they think, is this just a Netflix show or whatever? And then they realize, it's a serious group of women and it's really interesting. And as a result, it paid off it paid off handsomely because the investor interest was tremendous.
In any event, the show was very well received, reviewed. I enjoyed it as well. So let's get into the business model of Swvl. So Youssef or Victoria, can you guys talk to us about Number one, how Swvl differentiates itself from competitors such as Uber/Careem. I understand your CEO came from a background at Careem. How do you differentiate yourself from competitors in the marketplace?
Absolutely. So I think the key differentiation is technology, right? The kind of the ride-hailing companies are focused on a very different technology, which is focused around the dispatching of the vehicles and around one-to-one transportation, right? We come in with a completely different proposition. We don't say, how do we connect one rider with one driver? We say, how do we create a technology that allows us to pool 15 different people on a minivan, minibus, and by doing that, allowing these people to pay 80% cheaper than they would pay to a ride-hailing company or owning their own car, and allowing drivers to make 1.5 to twice the kind of the earnings they were making pre-Swvl by the power of this pooling. But in order to make this pooling work, and in order to get all of these people on the same minivan, while making sure that each one of them reaches their destination in no more than 20% of the time they would have taken had they gone directly point to point, that is the power of the proprietary technology we've built. And that technology is completely differentiated and built in-house. We have kind of 150 engineers working kind of day and night on basically continuing to advance this technology to solve this very complex problem.
And now a word from our sponsor, Accelerate, one of Canada's most innovative and fastest growing alternative investment solution providers, with a suite of institutional caliber alternative ETFs for investors seeking diversification and long-term performance. The Accelerate One Choice Alternative Portfolio ETF, symbol 1C, ONEC on the TSX, is Canada's first alternatives portfolio solution, providing exposure to 6 alternative asset classes, 10 alternative strategies in one easy-to-use, one choice ETF that charges a management fee of just 0.2%. The Accelerate One Choice Alternative Portfolio ETF trades under the symbol 1C, ONEC on the Toronto Stock Exchange. Find out more at accelerateshares.com.
So can you talk a little bit about the underlying unit economics that you have, and as well kind of touch on the unit economics, because it is a platform, the unit economics of the drivers as well?
Absolutely. And that's exactly the power of Swvl, right? And if we start on the driver's side, the fundamental problem you have today is that supply of private minibus and minivans does exist, and does exist in large numbers in these kind of emerging and even developed markets. Cairo alone, for example, has 155,000 privately owned minivans and minibuses. The problem is not the presence of that supply. The problem is the inefficiency and the underutilization of that supply. Most of that supply is working today for a single school, a single corporate, a single university, where they're doing predominantly 2 trips a day, and only during the up season of the school, so not in the summer, or the up season of the tour agency, so not in the non-touristic seasons. We take these vehicles and we make sure that they're utilized 4 to 6 times a day instead of 2 times a day, and every single day, including the weekend, including the breaks. And we do this by cross-utilizing the same vehicle across so many different sectors. It is the same vehicle that now works for a school, a corporate, a university, a call center, a factory, a travel agency, each one of them having very different timings and shifts during the day, during the weekend, during the summer. And hence, even though the cost per trip is now significantly less to Swvl, the total earnings of the driver are now significantly higher than what they were before. And that's why the driver makes significantly more money. But because we do so many trips, that even though the aggregate earnings of the driver goes up, the earnings per trip go down, which means that we're reducing the cost of the trip so much, which means that we're able to both make a profit and offer it to the customers at a very low and affordable cost that allows us to access all income levels, not only the people who can afford private ride-hailing.
And I'm sure you guys have been super, super busy. Recently announced the merger between Queen's Gambit and Swvl, $1.5 billion equity valuation. So congrats on that. But as we all know, a lot of the work's just getting started here. This is a unique transaction because you'll be the first $1 billion plus unicorn from the Middle East, and unicorn being over $1 billion valuation. How does it feel to, have that first to list on the NASDAQ?
We're very proud, right? We're very proud because obviously we're able to access the deepest kind of capital market in the globe, which opens all sorts of opportunities for us. Second, we're able to do it via the SPAC route, which allowed it to do it very, very quickly, and speed is critical to everything we do. And most importantly, because we're able to do it with Queen's Gambit, which is, as Victoria mentioned, a sustainability-focused SPAC, which is perfectly aligned with our ESG mission. Our mission on the environmental side is replacing every 15 cars by a bus, soon an electric bus. On the social side, effectively making sure that reliable, safe transportation is now affordable for the entire globe, regardless of income levels, and that social inclusion is critical. And finally, on the governance side, allowing governments to refocus their budget spend that they were otherwise losing on public transportation and spending that on education, healthcare, and R&D. So from that perspective, aligning with a SPAC like Queen's Gambit with that sustainability mission is quite critical from our perspective.
And I was wondering, what has been the feedback thus far from investors? I wouldn't mind getting both of your perspectives. So, Victoria, do you want to start? What are you hearing from investors with respect to the Swvl deal that you announced?
Sure. First, I want to comment a little bit on, first unicorn out of Dubai or out of Middle East. For us, we actually we looked at dozens and dozens of opportunities when we were looking for our partner. And we were really convicted that we wanted to be partnering with a global player, and we wanted to focus on a growth trajectory and wanted an asset-light kind of business model. And the company, while it's based in Middle East, it's a global story. And we just announced actually yesterday an acquisition of a European player, and we're going to be entering 10 countries in Europe. This is very much just the beginning for the company as far as their application and utilization of their technology. And so Europe, Latin America, and ultimately the US are all markets that we're going to be going after. So for us, I view that for the next couple of years, a lot of growth is going to be happening actually outside of the US. So that's what was really attractive to us. And so when we talk to PIPE investors around this opportunity, we really presented a global story here, presented the uniqueness of unit economics. This is a company that has a very clear path to being profitable. The company is growing in a very, very attractive way, both within existing geographies, but also outside of these geographies. And we had a plan then with expansion. So investors really understood the value proposition and the attractiveness of partnering with a company outside of the US, particularly in this sector with the unit economics and KPIs that we've demonstrated. So I would say reaction has been to the transaction, definitely positive. Very commonly, I heard that this is quite interesting, probably one of the most interesting deals I've seen in the last 12 months or so. So that was very interesting to hear. It's differentiated. It's not another, be it EV charging or whatever sort of flavor of the month that you've seen a lot of companies coming out with SPAC transactions. We really wanted to focus on a story that would resonate with investors, resonate with our mission around ESG, and has economic attractiveness for investors. So I'd say all in all, it was very positive.
And Youssef, what are your thoughts? What are you hearing from investors? I'm sure your phone is ringing off the hook.
Absolutely. I think we've been very fortunate and very privileged. We reached out to raise a PIPE of $75 million in what we were told a very challenging market. We were able to upsize to $100 million because of the significant oversubscription we've received. And not just with the quantum, the quality of the capital as well. If you look at the PIPE investors, some of them, we have Agility, one of the biggest logistics company globally, generating more than $5 billion of revenue from moving goods in more than 100 countries, allows a significant opportunity to expand into the logistics space. We've got Zain, one of the largest telecoms in the Middle East and Africa with more than 50 million subscribers, an opportunity to offer Swvl to these 50 million subscribers. We've got Luxor Capital, who is kind of an expert on marketplaces, giving us a lot of credibility. So both the quantum and the quality of the investor reception has been quite phenomenal.
And now a word from our sponsor, Accelerate, one of Canada's most innovative and fastest growing alternative investment solution providers, with a suite of institutional caliber alternative ETFs for investors seeking diversification and long-term performance. The Accelerate One Choice Alternative Portfolio ETF, symbol 1C, ONEC on the TSX is Canada's first alternatives portfolio solution, providing exposure to 6 alternative asset classes, 10 alternative strategies in one easy-to-use, one choice ETF that charges a management fee of just 0.2%. The Accelerate One Choice Alternative Portfolio ETF trades under the symbol 1C ONEC on the Toronto Stock Exchange. Find out more at accelerateshares.com.
Yeah, that's something I really commend you on, is the ability to raise a PIPE financing at such a scale and have it oversubscribed in this market is quite impressive. If that was the case, earlier in the year, PIPE financings, they were a lot easier to fundraise for. So that is quite impressive. And speaking to that large capital raise, can you talk a little bit about your long-term growth strategy in terms of different markets that you're moving into and how you're going to put that capital to work and get yourselves to a $1 billion run rate revenue figure over the next number of years?
Absolutely. So basically, we've got kind of, as you mentioned, that capital and even kind of less than that capital. So that capital already gives us an upside, because even with less than that capital, we're able to basically hit, as you mentioned, $1 billion of revenue in 2025 on a fully cash profitable basis, right? And that number is only from mass transit. So that does not reflect upsides like logistics, financial services, etc., which are on top of this number. And this is going to happen by way of geographic expansion, right? So we're targeting to be able to reach 2 million kind of daily trips and 50,000 vehicles on the platform globally by that year, by 2025. And we'll do this via geographic expansion. So today we're already in the Middle East and Africa and South Asia. We've already added Europe via the acquisition of Shuttle. We're going to be expanding our European footprint significantly off the back of that. Plus, we're going to have very substantial expansion in Latin America and Southeast Asia. All of them are geographies which face the same problems that we've solved in Africa, Middle East, and South Asia in the context of a very unreliable, if not non-existent, public transportation on one hand, and the very expensive, non-affordable private transportation modes on the other hand. So being able to solve this problem globally is going to be the key to that. And that all these numbers are just the organic growth, like our track record. And then we have substantive number of inorganic opportunities, because we're the first player in this space completely, the technology-enabled mass transit to be listed. We're able to basically allow us to kind of move to consolidate and to basically kind of create an ecosystem that supports all of the various national and regional champions around the world and really kind of become the overarching ecosystem for mass transit globally.
So you recently announced that Shuttle acquisition expanding into Europe. So is Swvl no longer an emerging markets play? Are the developed markets, Europe and perhaps some other markets? I'm not sure if North America is on the map in terms of expansion, but is that sort of what you're looking to accomplish, or you continue to be emerging markets focused?
So yeah, absolutely. So it's a global play. The majority of our revenues will continue to come from emerging markets, because this is the problem. These are the geographies where the problem is most amplified and where the need for a complete parallel mass transit network across all segments is really required. However, there is also a very strong opportunity in developed markets in having a more tailored approach, whether via offering software as a service, whether via offering our travel platform, which allows kind of cities where maybe inside the city there's a very strong coverage, but less so between the cities. And hence it is really a global play that makes sure that where there is no mass transit system, we offer one end-to-end. And then where there is a mass transit system but is lacking in certain areas, we're able to come in a very customized way and plug any gaps.
And so this deal was just announced a few weeks ago. I was wondering, Youssef, from your perspective, realizing that this is a relatively crowded SPAC market, what really set Queen's Gambit apart from other potential SPACs, or going public via IPO, direct listing, or even staying private? What was the game plan, and why did you choose Victoria?
I would say it's 4 things. One, it's the quality of the team. Victoria talked about kind of herself and her team. The level of connectivity, experience, track record, credibility they have in the market is unparalleled, which means the investor reception was extremely strong. And the doors they're able to open to us with strategic players, not just with investors, were really quite unique. Second, it's the caliber of the investors they bring with them, whether in the SPAC itself or that they were also able to bring into the pipe. And we talked about some of them like Agility and Zain and Luxor. Third, it is the speed they're able to kind of move with and the execution certainty they're able to offer because of their experience in the space, because of their track record. They know exactly how to do this, and they're able to get us to the finish line in a very certain and speedy way. And fourth is the mission we talked about. We see complete eye to eyes on mission, on vision, on ESG, on sustainability. We're exactly going to kind of after the exact same goals.
And what's nice about having both of you guys on the podcast is that I can ask this question of Victoria as well. With your mandate being sustainability, and you did mention you looked at dozens and dozens of potential merger partners, what stood out to you on Swvl? Why are they the right merger partner?
Sure. It's a great question because it covers a few things that we want to do differently with our SPAC. We promised the market that we're not going to be participating in any SPAC-offs, bake-offs, or auctions because we are a fundamental investor, and we believe that arriving to a correct valuation for the transaction is critical. And the SPAC-offs and auctions really derail your discipline, and you end up paying more than you should, perhaps for the wrong reasons. So that's the first thing that was very important to us. So we also said we're going to be utilizing our network, which we've got, like I said, a dozen of us around the table, super connected, lots of technology company relationships. And we utilize our network to find these targets. So when I said we spoke to dozens and dozens of companies, these are proprietary ideas and deals. We were first ones in front of the management team or the board to discuss potential partnership and an alignment of thinking. And so that's how we got in front of Swvl as well. And we were able to present very quickly the value proposition that we would be looking for as far as the valuation approach, the kind of this aligned thinking of ESG elements. And I'll talk specifically what's so attractive about Swvl around that. And then having a team that really knows their business and really button up to be able to get to the finish line in a very quick manner. So transaction certainty is very important for everybody, right? So we were able to present this to Mustafa and his team and Youssef, and we quickly arrived to the valuation that we thought was fair. It was giving credit to the company for growth and accomplishments they've achieved so far, but also gives a lot of upside from here to investors coming in today with expansion and all the synergies so that they will be able to leverage post-transaction. To us, what was really important was the fact that these guys had very similar mindset to us. They were not looking to optimize the price. So they could have run an auction, right? They had other SPACs knocking on their doors, but they really prioritized and valued our approach and the value we're going to be bringing on the back end of this transaction above the price optimization. To us, that was very, very important. And as far as ESG element, this company addresses from two sides. Social justice is one aspect. So allowing to have 70% of end users of Swvl platform are women. So allowing women to be able to have access to a safe and reliable transit system, to go to an office job, to go to a hospital, to go to get education, to go to university. All of these things are really, really powerful, and it unlocks economic potential for these individuals. And it's not just women, it's anybody who needs to have an affordable means to access transportation to get to those places. So the second element is around environment. Mass transit is clearly, it's very congested in busy cities, and anybody who's using Swvl platform is able to run much more efficiently their operations, and therefore reducing congestion in busy cities and reducing number of buses that need to run the same kind of operation. And ultimately, we will be moving towards electrification and using electric fleets. So that's an added benefit around ESG. So I think all of these elements really made it very appealing and attractive for us to partner with Swvl.
Prior to wrapping things up, Today, I wanted to give you the chance to mention any additional factors that investors should be aware of in terms of the investment case for Swvl. Like, what are some of the key drivers that investors should be aware of once Swvl is up and trading, or Queen's Gambit right now? And why do you believe that a tech-enabled mass transit solution has a lot of growth potential from an investment perspective?
So maybe we address them in a few things. One is growth. We started in 2017 making $100,000 of revenue. We're ending this year with $79 million of annualized revenue at least. That's 800x growth in 4 years. Today, we're growing at an annualized kind of CAGR of more than 430%. Second is the scale of the problem we're trying to solve. This is a global problem that we are by far the market leader, not just in the region, but globally in solving that problem, and the first to be listed in that space. Third is unit economics. Because of the power of creating that proprietary technology that allows us to pool these people together, we're able to kind of do that in a very profitable way that does not cap us at the typical commissions that shared economy peers will be taking in terms of 20%, etc. We're able to very significantly surpass these numbers. Fourth is the upside, significant upside to the business plan that we've presented, which, as we discussed, is only based on 20 countries, only based on mass transit. Today, with the announcement of Shuttle, we're already in 16 countries out of the 20 we're targeting by 2025, with significant opportunities to exceed that as well. All our existing shareholders are kind of fully locked up as part of this transaction, showing the level of conviction in this deal and in the opportunity to come. We have a very high caliber of new investors kind of joining and opening kind of further opportunities for the company. We have the plan that we presented is purely organic. Everything that's inorganic is either completely on top or an accelerator to what we presented to the market. We have very strong high kind of barriers to entry because of the proprietary technology and because of the significant first mover advantage we have in the space. So I think all of these are reasons why we believe this is a very attractive opportunity. And on top of all of that, we're pricing it, as Victoria mentioned, on purpose at a very attractive entry point to make sure we're able to create the right momentum for investors.
And that entry point, the current...
Yeah.
Go ahead, Victoria, if you have another point to make.
No, just echoing everything Youssef said. I believe, when we looked at this opportunity, we actually analyzed just a few markets, not every market where we're going to be entering, but just looking at current geographies in Latin America, so Brazil and Mexico. This will be, 5 to 10x sort of growth story over the next year or two, where you can really see significant upside from here. So as an investor, when I look at this, to me, it's a really attractive entry point. The company is going to be very focused on execution. There'll be no distraction around fundraising efforts. And also the currency will become very interesting, right? So you have a liquid stock, you can attract really unique opportunities for inorganic growth. So all of that adds to the value you can see for going down this path for a company like Swvl versus staying private, for example, which was one of your earlier questions, why SPAC route? And those are the benefits we saw when we took our portfolio company out via SPAC last year, where you really don't have those distractions around fundraising or around, if you want to expand your IP portfolio or your reach and you want to acquire other companies, that gives you a great currency. So from my perspective, I think this is a very attractive entry point and a significant upside from here, which is important because we're long-term investors. So we're going to be here for years, and we want to see this company really flourish.
The merger and the de-SPAC process expected to close in the fourth quarter right now. Queen's Gambit trading under the symbol GMBT. Once the deal closes, Swvl will be trading under the ticker symbol SWVL. So Victoria and Youssef, I'd like to thank you for coming on the show today. Provided a ton of details on your background, Swvl, what you're trying to accomplish, and your thoughts on the future. So thank you very much, and we wish you the best of success.
Thank you so much, Julia and Mikey, for having us. Real pleasure.
Thank you so much for having us. It was really insightful.
Take care. Bye, everybody.
Thanks for tuning in to the Absolute Return Podcast. This episode was brought to you by Accelerate Financial Technologies. Accelerate, because performance matters. Find out more at accelerateshares.com. The views expressed in this podcast are the personal views of the participants and do not reflect the views of Accelerate. No aspect of this podcast constitutes investment, legal, or tax advice. Opinions expressed in this podcast should not be viewed as a recommendation or solicitation of an offer to buy or sell any securities or investment strategies. The information and opinions in this podcast are based on current market conditions and may fluctuate and change in the future. No representation or warranty, expressed or implied, is made on behalf of Accelerate as to the accuracy or completeness of the information contained in this podcast. Accelerate does not accept any liability for any direct, indirect, or consequential loss or damage suffered by any person as a result of relying on all or any part of this podcast, and any liability is expressly disclaimed.